You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. Time to rock out in the world of vol. How's your trading week going? How's your vol week going? Hit us up. Let us know. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging and mainlining. Congrats to Madam Gigi, our Pro Trading Crate winner for the month of May. If you want to get in there for June, head on over to the Pro, theoptionsinsider.com/pro. That'll also get you past the bouncer. She's very mean. Past the bouncer for options oddities coming up after this program. It's kind of the official after party of Vol Views, if you will. Of course, we had a great pro Q&A earlier this week with some guy called, I don't know, Uncle Mike. You might know him. You might love him. You might loathe him for his stance on all things crypto. Either way, check it out. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on this D-Day of volatility. First, let's go out to the hinterlands of Chi-Town, where we are joined once again by the once future and present Dr. VIX, Mr. Russell Rhoads. Mr. Rhoads, welcome back to Vol Views. How go things in Rhoads land, sir?
Rhoads land. Looking forward to the weekend, and absolutely thrilled that I get to talk about weeklies trades a little bit later on that expire in July. That's right. We just started summer, so I'm going to talk about some midsummer stuff, and it'll be, as we all know in Chicago, it'll be over before you know it.
I was going to say, July, just a banger month for vol. We all know that. You come to the party for July and December. That's the two real banger months. When you're slinging vol.
And I do want to, one of my kids asked me something the other day, because I've traveled all over the place and there's only 4 states I haven't been to. Maine is one of them. Where's my invite?
Oh, it's an exclusive invite to the compound he is referring to, listeners, of none other than the Rock Lobster himself, Mr. Andrew G. from the land of the pit, holding court from his fortress-like compound on the shores of Maine. Mr. Rock Lobster, welcome back to the show, sir.
It is good to be back. It is good to be back here on this here Vol Views show. And I'm here. I don't go anywhere, Russell. So when you come, just when you show up here, just say I'm here. And I'm like, okay, so am I. Come on, let's go fishing, do whatever.
You can help him battle the clam pirates.
Deal with the pirates.
Yes, you can help him battle the clam pirates. He's outnumbered.
I'm sure Russell can stand on the edge of the dock and shake his fist at them.
All right, listeners, with the team assembled, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And as we're coming into the start of the show, looky here, a little bit more green on the screen, even if we are coming off the highs. Not that long before showtime, S&P, most of the major indices were up in the ballpark of 1%. Seems like we're coming back off that a little bit now. S&P up about 0.75%. NASDAQ up almost 1%, 0.95%. Dow up about 0.2%. And VIX cash hanging out pretty much where it's been hanging out for a bit now, right around the 17 handle, listeners, which puts it down a little over 3, about 3.25 points on the week. If we wait a little bit, if the S&P starts to retreat and VIX cash starts to climb, obviously that will change. But as of right now, hanging out right at around a 17 handle when we kicked off the show. Our old pal Volley, Mr. Scott Nation's Just the Facts, ma'am, straight at the money vol, hanging out a tick below 14, 13.9, down 2.8 points. And our old pal VVIX, the vol of vol, giving up the ghost a bit after the number this morning, down 11 points to an 88. So obviously a lot of folks were pinning some hopes and or concerns on the jobs number this morning that was going to maybe move vol a little bit. And it is moving vol down. That's what you were looking for. The jobs number coming in decently strong, listeners. The market liking what it saw, and that contributing to a little bit of this vol erosion we're seeing this week. Let's go around the horn the way we started. Let's go out to the hinterlands of Chi-Town. Mr. Rhoads, sir, what's catching your eye in the world of vol right now?
That 16 level, that's everybody talks about the over under for high low VIX to be 19 because people don't know any better and they calculate the long-term average. I've always really considered that the significant number 16. We've got the rule. We basically have the rule of 16 in that when we're under 16 in implied volatility land, when you convert it to a single day, that's less than a 1% expected move. And above 16 is more than a 1% expected move. And I feel like that's a better over under number for high and low volatility regimes. And we're creeping our way down there and looking at trading activity. It looks like some people think that's where we're going to get that maybe VIX is going to go back to where it can't drive anymore, except like in Mississippi, if you work on a farm and you only have to be 14.
Did you conspire with the Rock Lobster before this show? Because he's sitting on a boatload of 16 puts in VIX. What you're saying right now is music to his ears. First, you start the show saying, hey, I want to come to your house. And now you're just teeing him up to print money on his 16 puts. I don't know. Is there some skullduggery afoot? Mr. Rock Lobster, are you two conspiring behind my back, sir?
I would love to. The only problem with the 16 puts is they haven't changed price in like forever.
Like SVIX.
I think last week I said the 19 puts were $1. And I go, they're super cheap, or like maybe they're 85 cents. And I go, and I just can't buy anymore. And in this a week later, they're $1.12. So, with VIX trading 17, that puts them about $1 underwater. Which is, there is, I guess we'll talk about the vol curve in a second, but yeah, can the 16 puts play? They absolutely could play. The amazing thing is, nobody cares. It's hard for me to believe that nobody cares about the 16 handle in VIX. But of course, when you have the president and the head of Doge, or the former head of Doge, throwing barbs at each other over the internet, canceling each other's contracts, outing each other, doing whatever to try to get the budget balanced. That is not a recipe for sub 16 volatility, is all I can say. So it has been let's just say a wild week on that score. So, but ultimately, volatility does gravitate toward the realized vol, and SPY realized volatility is now below 13, 10-day volatility. 30-day vol on average is around 14.5. So again, if you're a trader and you're holding contracts, those contracts decay. If you're a liquidity provider, and they're not dumb, like, you don't want to be holding a lot of 17 volatility contract decay when the market's not really doing much. Now we have had, I think the daily moves have been way more than normal relative to what realized vol is. That would be a great Russell statistic. So I think that's why volatility has stayed stubbornly high. But yeah, I think it's good that we're going to be dripping into VIX expiration. So I think the VIX futures curve that's the thing where the vol is currently hanging out in that curve. So now, can we get to 16? You would think that with VIX at 17, the 16 puts would be a lot more than 8 cents. But that's where they are. And I think they're fairly priced at this point.
Mr. Rhoads, congrats to you, sir. You have now derailed our chat. They are all down the rabbit hole. What are the other 3 states Russell hasn't been to? So far, Alaska is a leading contender. We've got Rhode Island. We've got Alabama, Nebraska, and North Dakota.
They're scattered. It's the weirdest thing. It's since it came up, it's Maine, Montana, Idaho, and New Mexico. It's the weirdest freaking thing.
So you are kind of all over the place. You kind of not quite.
Yeah,
4 corners,
it's like I've just missed patchy things in the country. Yeah. So
not quite 4 corners, but almost out there. So there you go.
Yeah, no, it's kind of weird. That's the weird part of it, right there, is because they're scattered. That's why it's a topic of discussion around the. So
those of you who were playing Where's Russell Bingo in the chat, there you go. Did you have those 4 states in your bingo card? Then you win fabulous prizes, listeners. Let's see if anybody won out there on the vol surface this week, listeners. Spoiler alert, the front portion of that curve is down. The June future, as we're coming into the start of the show, down pretty much exactly 2 points from where it was this time a week ago. July hanging out down about 1.25 points from where it was this time a week ago. So we need that to kick into a little bit higher gear. Then all of our chat folks will be happy. I saw them celebrating about an SVIX 15 handle yet again. We've been there a few times now over the past week and change. Can it hold it? We'll see. If the S&P is turning today, then the answer is probably no, but we shall see. It's probably the same thing as the Rock Lobster 16 puts. We'll never get there anytime soon. But that said, listeners, coming into the start of the show, again, we had June, down 2 points, and the July future down about 1.25 points out there, listeners. Looking at the term structure right now, coming into the start of the show, we were saying for a while, we've been kind of locked the latter 2/3, latter 3/4 of the term structure, pretty much right around 22 handle. That is still pretty close to the case, but let's average that down a little bit, down to around 21.75 to 21.5, somewhere in that range. And once you get beyond August, we're pretty much back above 21 again, and then all the way out to next year, Jan, Feb, hanging out right around 21.75. So interesting term structure out there. Mr. Rhoads, what's catching your eye in the vol surface? And I also have an additional question for you. This one kind of caught my eye. We were running through the numbers from our friends over there at OCC for the month of May. May, a banger month in the options market, listeners, up 20 0.4%. Pretty much everything up across the board. Equity options up 20%. ETF options up 23.6%. Index options, the much ballyhooed 0 DTE, up about 10%. The lone dark spot, Mr. Rhoads, and it's a pretty hefty dark spot, futures, which, as we all know, the lion's share of the futures that are cleared at OCC are VIX futures, down 26% year over year from 4.7 million to 3.4 million. I have to imagine, did some contract roll off the board at OCC that they are no longer clearing? How the heck are VIX futures down 26% year over year, sir?
Common after we've had a volatility event. It really isn't. And it back when I worked there, whenever we would have, a VIX to the 40s or something like that, and when I was working there, and of course, everybody, I'm being sarcastic here, so just take it with a grain of salt. But when I worked there, there was never more than 5 months without a new all-time VIX high in volume. And then I left, and some of the stuff happened in 2020, and I think it took almost 2 years for them to really recover. So you got to figure, I've got 2 thumbs, and this guy I'm kidding again, but I thought it was really funny because on average, it would take, after a volatility event, VIX futures volume would drop off a cliff. And then it generally would take, because you'd have a lot of the short people that got run over and we're not in the market anymore. And then they would start to come back as we get back to some normalcy like we're seeing right now. So when I saw that number was negative, I wasn't overly shocked. But the one thing that I didn't go search out is what happened last May. I don't know if there were, if we had excess volatility. Was the first debate in May or June?
It was early. I think it was June, though.
Okay, but it was June. So I saw the same thing. I get the same thing from OCC, and I saw VIX futures volume down. And honestly, I saw it was a red number. I didn't realize how significant it was.
That's as bad as I've seen it. I think maybe ever. That 26% year over year.
That's, again, something must have been going on in May last year, but we would always see a drop off in volume after after some sort of volatility event. In fact, when SIBO merged with BATS, one of the BATS guys came and talked to me. One of the senior BATS guys came and talked to me and said, asked me about that lumpy volume. And he was like, well, maybe we should be hedging against that. But exchange really can't trade its own product like that. But and from a corporate risk standpoint, it was kind of an interesting conversation to have. So I know that's a significant number, but I'm not overly shocked that it was lower. So is that a good response to your question?
VIX in May a year ago, we hit an 11 and 12 handle. So VIX was pretty anemic year over year. So yeah, just
that's all the short folks.
Yeah, I guess they just got run over. Apparently, that 26%. That's quite a hefty toll there. Mr. Rock Lobster, same question for you. So anything catching your eye on the vol surface this week?
Yeah, the steepness. So the way I measure, I have kind of a funky volatility measure I came up with at Option Pit. And just from observing the VIX curve. So what I want to do was what does a VIX curve look like normally when VIX is 12? So that's the mode. At least when I did this, 12 is like the mode handle for VIX. So, what I would say a pretty tranquil time. To me, that's the kind of sort of the higher end of zone 1, the bottom quartile. And there's what I noticed was, in general, when VIX is around 12 on expiration day, the front month future is usually $2 over. So if VIX is 12, the serial future that expires the next expiration is about $2 over, and the next future is around $1. And I did this observation that I had our statistics guy. He drew a curve, and basically a regression line, and then kind of fit what volatility. When you have kind of those forward vols sort of stacked up higher, when you have vol lower in the front, in the short term, you have those really low short-term vols, and then volatility is higher in the back. So I just drew like kind of what a normal curve looks like. And then anytime we deviate from that, I can see how much the market is under stress. And right now, the curve is ultra steep for what we should be when VIX is 12, because it makes sense if you're in the number one quartile of volatility, the other three quartiles are inevitable. So it's likely volatility is going to be higher. So you have a very steep contango curve. But that's usually when VIX is 12. Right now we have that really steep contango when VIX is 17. So in my view, traders are still pricing, the action we have had. They're not letting it go, and there's no natural sellers of vol below a certain level. So that's why that we're trading a 1690 now, and the July contract is 2025. With VIX this high, I bet you that has not happened. If Russell looked at that number, how many times with VIX around 17, the July contract was $3 over that. And then we have what I would call kind of normal relationship after that. So it's pretty steep for as high as VIX is. Again, these are all relative numbers. And so that's why I'm like, wow, there is a lot built in. So the vol products own VXX, UVXY, all the vol products, they're all piling into that July contract at 2025. And if we get a 16 settle, that is going to be $4. So that is what, like 20% of the value of the vol products could, like a huge chunk of value could go away. Where these things. Now, there's no guarantee that's going to happen, but it does set up for kind of an evisceration of those products. And then, of course, that is where SVIX will fly in general. So SVIX will do well, SVXY will do well. So it's setting up for that. It hasn't happened yet, but that is what I see from a very steep curve usually. And to me, that means like traders are like, hey, there are no sellers of vol back there. And guess why? We have trade war 2 could start any moment. Who knows what Trump will hurl at Elon Musk. Of course, we have Congress, who basically is all derelict. We need term limits to get rid of all those idiots, all of them. I mean, there's maybe 5 I would keep. Everybody else can go. And I don't think Americans would lose too much sleep over. But they've added how much? 20 trillion to the debt in 5 years? I don't know about you, but I don't think I've seen any of that 20 trillion. Maybe Russell has, or maybe Mark, you have, but I haven't. So anyway, that is, and I think that's the reason why volatility is staying relatively high. We got kind of like high stakes game going on right now.
Very high stakes indeed. Speaking of high stakes games, Mr. Rhoads, right before you gave us your states you haven't visited, we have our good buddy OG in the chat. He went to Google. He went to the Google Meister. He looked up the least visited states in the U.S. He came up with Alaska, North Dakota, Idaho, Montana, and Nebraska. So he pretty much had exactly your list, with the exception of, I think, 1 or 2 here. So there you go. Google knows where you haven't been, Mr. Rhoads. How scary is that?
I'm just average.
Yes, there you go.
I'm just average.
He's just an average guy.
Just one thing with respect to the curve is my sizzle headline over the weekend for my blog was VIX term structure starting to go back to normalcy. And of course, somebody wanted to debate me on Twitter about it and said, no, it's not. I'm right. You were wrong. I don't debate on Twitter. If you want to talk to me about something, send me a direct message. I'm happy to talk to you about it, but I don't do that crap.
Are you claiming someone got spicy and argumentative on Vol Twit?
I don't play with that at all.
Hard to believe. Someone would have an opinion on such things as the markets or Vol out here, listeners. Let's keep rolling. What is your opinion on VIX options today? Let's all find out together, shall we? Is it a spicy day in VIX land? Well, it depends. Do you consider 300,000 contracts exactly to be spicy? A month and change ago, we were hanging out, 1.1, 1.2 million contracts a day. 300K, not that spicy. These days, the ADV back down to a more seasonally appropriate 678,000. It's down another 27,000, so moving the wrong direction. But then again, it is the start of June, listeners. Not usually a banger time for VIX Options volume out there. So 678,000. So in light of that new context, 300,000. Does that sound a little better to you? I'll leave that up to you to determine as we go on out to our proprietary top 10. No one else better ever crunch these numbers, or we're coming for you. Our lawyers are coming. VIX top 10 size positions. What's open for size in VIX land right now, listeners? Let's find out. Spoiler alert, doesn't cost you that much to break into the top 10 right now. It is the start of June, after all. That gets us to the June pars. Man, we're kicking it off with a bang this week. June pars. We're not messing around. We're not going 25s or even 35s. Nope. Right to the pars. 137,000. I don't know why that brings a smile to my face. I've been doing this show for a while. I should probably expect that by now. But nonetheless, when we're hot out of the gate at the June 100 calls, it kind of makes me chuckle, listeners. But that's where we are. By the way, hanging out 9-1 calls over puts yet again this week. Can we find Waldo? Let's find out. Maybe he's hanging out in those 4 states that Russell hasn't visited. Number 9, 171,000 of the SEP 80. So, man, we're off to the races this week. This is what happens too, listeners, when you get a little bit lighter in the OI. Some of these, shall we say, more exotic strikes make their way into the top 10. You probably wouldn't find these on a busier month out there. But nonetheless, that's where we are. Number 8. I think we found him. Russell is hanging out in Idaho at number 8, 175,000 of the June 16. Oh, the Rock Lobster's put. It's like 175,000 other friends joining him on that strike. Are you down for a little June 16 puts, or is that a bridge too far? We were joking last week on the show, listeners. You know VIX is going to go out in June 1601. That's exactly what's going to happen. You're going to be looking pretty good. Maybe you're hanging. Maybe you even break it. Maybe you get down to 1575 or so right as we're going into settlement. Maybe 1560. You're like, oh, man, I'm good. I'm at least breaking even on these puts. And then, bam, here comes the tweet. We hate China. We hate whatever. And, bam, you're closing 1601. Maybe 17 handle. Who knows? Either way, you know that's how it's going to play out. 175,000 of the June 16 puts. I'm going to talk some meteor VIX puts in a second. Number 7, 180,000 of the July 40s. You know things are wild in the bottom half of your top 10 listeners when the July 40s look comparatively reasonable and level-headed. Yeah, that's where we are. 180,000 of the July 40s. Number 6, $1.89 of the June 20s. Why can't we kick it off with those ever? Nope. Got to go to the June pars. Number 5, 191,000 of the July 30. So again, out there, but still comparatively very normal strikes. Number 4, 200,000 exactly of the AUG 42 halves. Number 3, 211 of the AUG 25s. And our top 2 for this week, listeners, what are they? You know this strike. You love it. Maybe you hate it. It's been open for size every month, including number 2, 240,000 of the NOV 47 halves. And the big dog out there yet again, can you guess it? Do you remember from last week, listeners? Yep, 278,000 of the July 35 calls. Once again, top in the list. Again, you know things are kind of light when it only costs you a little more than 250,000 contracts to top the list in VIX land. But you know what always tops our list in the minds of our listeners? The thing they're really tuning in for every week, listeners, it's Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, sir, have at it. The floor is yours.
When do I get new music?
Never. This is the best song we have.
Come on, man. I did. You know, Phineas and Ferb relaunched this week, and they had a new theme song. If they can do it, we can do it. All right, Monday.
I thought you loved your song. I thought it was part of your
I
branding.
love my song. It's just my oldest daughter, I play it around her every once in a while because she hates it so much. She just says, I don't want to be associated with it. And she's actually becoming kind of a media figure. So we're really going to have fun with her.
If it annoys your teenage daughter, then what better reason to keep it around, sir?
Yeah, exactly. All right, Monday with VIX at 1896, way up there compared to where we are now. Somebody bought, and this is kind of fun. I ended up going down like a 30-minute rabbit hole on this one. Somebody bought 120. Thank you for the funky size to make it easy for me to go try to find out what you're doing there. Somebody bought 120 of the June 3rd 19 puts for 26 cents and sold 120 of the June 11th 19 puts, basically rolling from being short the June 3rds to the June 11th 19 puts. They bought the June 3rd ones for 26 cents, and they took in 56 cents when they sold the ones that expired a little bit farther out. And they were kind of smart there by getting out of those June 3rd puts before settlement, because they would have been worth 76 cents at settlement. So I'm pretty certain that they took a loss on those, because it looks like they entered being short those the week before on the Tuesday after Memorial Day at 15 cents. It was the only 120 lot. And I've noticed other 120 lots. I couldn't find another one, and part of the reason was because of standard expiration. It's harder to find these trades that people are doing for just a few days. But they seem to, and I haven't seen them get out of this short 19 put with the weakness in VIX, but kind of interesting. And I was picking up on this, and there are a handful of these programs that appear to use weeklies that do trades every early Monday. There might be something to take advantage of there. Tuesday, VIX at 1765. Somebody's taken the other side of what we're talking about here, but somebody came in and sold 200 of the VIX July 2nd 17 puts for 28 cents. Maybe they're getting a little nervous about that one. And then I don't particularly like this trade. I have a note to myself. Remember, you don't like this trade. It's a holiday week, and we were off that Friday. I wouldn't be the least bit surprised if, that holiday, that's a quiet freaking week. July 4th week is just always quiet. I don't care what day of the week the holiday falls on. So I don't know if I like being short those 17 puts using I might have, if I felt like VIX was going to remain above 17, I might have used the contracts that expired the week before. I think the week before would be the June 25th. Also on Tuesday with VIX at 1783, and this trade appears to be being added to. Somebody bought 500 of the VIX June 11th 17 puts for 15 cents. And I have a little note to myself that the last time we had a VIX settlement, when I see trades like this that are opening up, I assume we're shooting for settlement. The last time we had VIX settlement below 17 was late February. It appears that they're back, and it's kind of funny because it looks like they've been paying between 9 and 14 cents for these today. So yeah, Andrew, the price of those things never really goes up, does it? You're out of the money. Well, kind of in the money now, but Wednesday, VIX, when it was between 1767 and 1779, somebody came in and sold about 2,000 of the June 11 18 puts for 50 cents. A lot of people thinking VIX was going to remain at relatively high levels. And then a really interesting bullish trade. I guess it's somebody bought, this is, it's not going to make money, but it's so cheap that why the heck not? With VIX at 1773, somebody bought 100 of the June 11th 26 calls for 13 cents and sold 100 of the June 11th 27 calls for 10 cents. They paid 3 cents. And if something, if they know something, if something happens and we get a volatility event that pushes VIX to the upper 20s, that could be a really nice return on capital.
I smell a little bit of a Dr. VIX maybe exploring that one for his own portfolio, sir.
No, I want my $3.
$1.
I'm not giving up my $3.
$1 widespread doesn't float your boat, sir.
$3. I'm not spending it. I'm not spending 3 for 100 with the odds at 0.01%. And then what I did, I took that and I tried to figure out if you were able to repeat this trade over every week using weeklies, how often would it pay off the dollar? And it was only like 3 or 4 times out of a couple of hundred trades. So it really, if you did this consistently, if you could do this consistently, you'd have still lost money on it. So you got that not a really good, not a trade that has some sort of edge, even though it's really cheap. It's not cheap with an edge there. Yesterday with VIX at 1793, somebody sold 100 of the July 2nd 40 calls for 31 cents. Probably feeling pretty good about that. Not a whole lot on the tape so far today. I did note already that somebody was buying more of those June 11, 17 puts and paying less for them than they would have paid on Tuesday, even though VIX is basically a point lower now.
There you go. Thank you for that, sir. Quite the rundown. Yeah, $1 wide spreads, they don't really get my juices flowing, but you're right. You can't beat the price, I guess. Because if you're going to pay 3 cents to make 100, maybe you go on Kalshi and get something like one of those crazy binaries or something like that. If that's your game, listeners, there are other options, pun intended. Are there a lot of options today in VIX land right now? 300,000, I said. I think it's up to 303 right now. So we're lighting the world on fire, listeners. Let's see what's lighting it up today. The big dog today, such as it is, 51, almost 52,000 of the June 40 calls. If you're wondering what those went up for, listeners, they went up, looks like it's part of a ratio 22-40 risk reversal. And the 40s traded for 7 cents, 22s for 40 cents. So typically in those, you're selling one, buying. In this case, looks like they have it as a funkier ratio. But it could also, there is size OI there, so they could be just unwinding something that they had on from before, in which case they saw there's still 40 cents left on those 22s, and they're deciding to get the hell out of Dodge. But either way, size paper looks like it's going up in a bit of a ratio. Only 12,000, to give you an example, listeners. 52,000 of the 40s have traded. Only 12,000 today of the 22s. So a pretty sizable ratio. We in the past have seen these go up roughly, usually 1/4, and that seems to be roughly the ratio they're going for here. Again, number 3, 8,800 of the June 18 puts. By the way, if you did it 1/4, listeners, that would be 12 cents, which is kind of interesting. Still a credit if you sold it. So kind of interesting out there. You like that, listener? Would you be doing that new right now? Clock's ticking on that bad boy, but intriguing stuff nonetheless. It's a wide range, 22-40, but if you're kicking in with 4 to the upside, you don't need as much room to run to start making money on that. But it's a weird one, could be an unwind, but we thought we'd bring it to your attention. Yesterday, a little bit more paper on the tape, 570 on the tape. The big dog, 46,000 of the July 30s, followed by 44,000 of the July 17 puts and 40,000 of the July 24 calls. We went and did a little bit more digging. Looks like they all went up together. Bit of a vertical versus a put, listener. So it was the July 24-30 vertical. So obviously a $6 vertical. They bought that for 70 cents. And then they sold the 17 put against it. All this 20,000 times each. Looks like they did it twice for 38 cents. So net, they did effectively that ratio risk, or not even a ratio, just a risk reversal for 32 cents. That one kind of struck me as odd. Russell was just talking about the 17 puts. Those are obviously an interesting strike right now. Mr. Rock Lobster, I'm guessing this one might give you a little bit of the heebie-jeebies if you're long a boatload of the 16s. Are you comfortable selling the 17 puts for 38 cents as part of that spread and getting the whole risk reversal for 32 cents? Or are you worried about wearing it on those 17 puts, sir?
You feel like you're going to wear it on the 17 puts a little bit, but you don't have, we going to 15? I don't see that, but you know what? That's when vol goes to 15, when nobody can see it going to 15. That's how those sneaky little things happen, right? Everybody's holding it, and then all of a sudden they're like, I don't want to own this anymore because maybe it's done. So yeah, it's not my favorite thing to do there.
Well, now you're sitting on a boatload of the 16 puts, so here you go. That's your license to do this risk reversal. And if it falls out of bed, you got the 16 puts in your back. What? How could you lose, sir? It's free money.
Yeah. You would think it's free money. But I'm not so sure it's free money for some reason.
Yeah, sometimes that free money comes with a whole bunch of strings attached. Either way, listeners, you
A
like
little
that?
bit.
You like that whole vertical? You like that whole ratio of vertical? Or I keep saying ratio. That whole risk reversal. They did it 40,000 times for 32 cents. Buying the vertical, selling the put. You like that? It's an interesting setup. Again, the only thing that gives me pause is the 17 puts. But then again, that's why they're getting so much juice for it, and that's why they're getting that vertical for pretty much half price. So you go to the 16 puts, not quite the price that you're getting there. But nonetheless, interesting stuff. Wednesday, 492 on the tape. The big dog, 21,000 of the June 25s, followed by number 2, about 19, almost 20,000 of the June 18 puts. So a little bit beefier strike there. Number 3, about 18,000 as well of the Rock Lobster special, the June 16 puts. Number 4, 16,000 of the June 22s. And number 5, 16,000 as well of the July 24s. Tuesday, 438,000 contracts on the tape. So again, kind of a very quiet week, hence the ADV continuing to come in, listeners. The big dog, 30, almost 31,000 of the July 45s and 28,000 for number 2 of the July 25s going up out there. So it looks like we had a 25-45 vertical. I know the 45s went up for 39 cents. I'll have to go look for the 25 leg. But either way, you like those 45 straight up for 39 cents, listeners? They were trading decent size on Tuesday. Number 3, 20,000 of the July 27s. Number 4, 16,000 back to those July 17 puts. And number 5, 16,000 as well of the June 18 puts. Monday, 508,000 contracts on the tape. So far this week, not a single day that has really threatened that newly lower ADV out there. So again, we're heading into the summer months, listeners. 508 on the tape for Monday. 25,000 of the SEP 25s was the big dog, followed by 25,000 of the SEP 25 puts. Looks like we got a little bit of a combo / straddle going up there. It's a quiet day when that takes the top spot. Number 3, 22,000 of the AUG 60s. Number 4, 18,000 of the June 19 puts. And number 5, 17,000 of the June 18 half puts. Mr. Rock Lobster, we talked about that bit of a bullish risk reversal. Anything else catching your eye in VIX Options land this week?
I have to say it's hard to ignore 175,000 of those 16 puts.
You got some friends hanging out with you.
On this cycle, and also the fact that, now the volatilities are getting the June 17 calls, the volatility at the money has dropped to 67%. Like all of a sudden they're pricing the straddles like $2. So that is not the that is probably the lowest price of a straddle with 2 weeks to go that we've seen in about 4 months. If you think about it, like the 17 straddle is currently, the 17 puts are 28 cents with VIX trading 16.72. It's like, I'm sorry, but those are some pretty cheap options right now. So that's just telling you how steep the volatility curve is, that those are at fire sale prices currently.
Mr. Rhoads, I see you raising your hand there like in class.
I did. I raised my hand just because we're talking about cheap options. Right after I did the weekly thing, I was looking at weekly quotes that expire next week, and I bought the 20 strike put for 230 when VIX was at 1705.
Oh,
I got freaking 65-cent buffer in there, Well, I've got something else to talk about, but it's ETP oriented combined with those options, and so I'll let you go ahead. But it was just sitting there. I almost felt like I was making a mistake, like I was seeing a mispriced option.
Free money.
So it was just sitting there saying, "Buy me." I think I feel pretty good about it for the moment.
It's literally free money. You can't lose, sir. A bit of a meatier way to go about getting short a little vol versus what we're just talking about, the 16 puts or even the 17 puts for 38 cents. But I could see why maybe you were attracted if you don't mind committing a little bit more capital, listeners. That is one way you could go. Another way you could go, Mr. Rhoads, is to the land of inverse vol. I see our chat excited. Mr. Rock Lobster, I might be excited. SVIX, it did the seeming impossible as we were talking. It broke the 15 handle by 2 cents. Put on the party hats. Drink the champagne.
Survey idea. How long before SVIX is higher than VIX? How long?
Oh, that's a fun, that could be a fun poll.
That could be a fun poll.
I mean, theoretically, are we at 10 cents a day in decay? So, that could happen in a week, maybe.
That could happen in an hour. If VIX dips enough.
If that happens, Rock Lobster's happy on his puts. A lot of our chat's happy on their SVIX.
We're rooting for you.
We got some happy people on both sides of that trade, I would think, if that were to come to pass. Either way, 15.02 right now, listeners, up $1.02 since our last show. So there you go, all you folks excited. You can't be excited by the ADV, though. It continues to fall off a cliff. 7,800 contracts. That's down another 3,200. I don't know what's up with the options out here in SVIX. Maybe the fact that it's not really doing anything is killing people, but it has been decently range bound. So if you've been wheeling it or doing some of those kind of trades, you've actually been doing all right. You could have wheeled in right around the 14 handle, even 13.5 not too long ago. You could get out right now for 15. You could have done that a couple of times over the past few weeks. So you can't be too mad at that. Nonetheless, the ADV continues to plummet. And Mr. Rhoads, the sexiest of all products, just dripping sex appeal. V-yields. Get ready for this. I don't know if you can handle this, Mr. Rhoads. And you, Mr. Rock Lobster. Might be too sexy. Up 6 cents this week, sir. 6 cents. Can you handle all of that action, sir?
Low and steady wins the race.
I guess. If it's a race.
The tortoise
if it's a race
of the VIX ETPs.
Where the hair dies, then yes, the tortoise might eventually win. It's SVIX goes the way of the dodo.
I wanted to launch options so the implied vol will be 2%.
There we go. Good. So what's catching your eye in super sexy world of inverse vol, Mr. Rhoads?
SVIX starting to grind its way up, V yield doing the exact, following upward. I hate that we pick on that guy. He's a special member of the VIX ETP ecosystem and trying to do something different. And everybody
special in what sense of the word?
And that fund has $100 million in it.
Well, they're 6 cents richer this week, so
yeah, they made 6 times however many shares are outstanding there. I've got on my long list of things to do to look into the new point-oriented VIX ETPs that have been registered, but I don't think are available quite yet. Maybe the long one won't deteriorate as much, and maybe it'll get some more love relative to this one. Who knows?
Well, let's hope. And, we joke they have been on this show. The V-yield guys, obviously, they have good intentions. Just the net product right now, not exactly dripping with sex appeal, but maybe that's for you. Maybe the inverse vol space is a little too wild for you, even though SVIX has been mostly vacillating for the better part of the last month. But if that's too much for you, I present to you option B, 6 cents in V-yield. Mr. Rock Lobster, sir, what's catching your eye in the world of inverse vol, which I believe when I tossed to you this exact question last week, you had a 2-word reply, it sucks.
Yeah, well, it sucks slightly less this week.
15.02, 2 cents.
Yeah. So SVIX is actually decaying upward like around 55 cents a week now. So it's starting to, relative is trucking a little bit, almost 1% of the value per day. And that's, and that's a symptom of this very steep curve. When the people were arguing with Russell on Twitter and they're, but when the inverse products are starting to decay at a high rate, that's a more normal vol curve. Like it's literally, I think, the definition, right? And VXX getting slaughtered at 35 cents a day in decay, downward. So those are literally the very definitions. I'm just surprised that we are this steep at a 1669 instead of at a 1250. That's what I think we're getting into that shape pretty easily, but I think that's a symptom of our mercurial current president. But at least, I think they're traveling a little bit, and they might make. This is also times when they're interesting because the premiums in them are very, very low. So, just so for the listeners at home, like when you're doing risk reward on trades and boring stuff like that. So the June 20 calls are the June 2015 calls in SVIX are 55 cents. On decay alone, that option should be worth $1 at expiration. So just sitting there gazing at your navel for 2 weeks, that trade should deliver you 100% return as long as VIX stays flat. So you've got very low volatility. And of course, what do I do with trades like that? I go take the money I think I'm going to make, and then I go buy long, farther dated contracts in VIX, like in the July cycle or something like that. And you sets up all kinds of goody trades like that where you buy options, but you have potentially positive decay. Now, if you understand that, you'd be in one of my classes right now. But when volatility gets to interesting places, now, is there a guarantee that VIX stays here at 16 cents? No. That's why you have the long vol somewhere else that explodes and makes your life happy. But like what is compelling is that when you get VIX down into this level, the vol curve gets very steep, volatility gets very low in the options, and there you basically kind of set up these funky carry trades. They're interesting trades. You've got to be patient, though, for them to pay, because the trade is not paying tomorrow unless VIX goes back to 20 or 21. Mostly they just kind of, they peter, and all of a sudden your short vol trade makes you a little money, and you make like 10 cents on the whole trade, but you're able to keep a long VIX contract for, you basically had paid for a long VIX contract. So usually what happens is that means the market's not moving anymore when it sets up like this. So, but I can't help it but do them.
The rest of the vol space is moving a bit this week, listeners. UVIX down 4 points, 26 even as of the end of the show. 30,000 contracts on the tape. That's above the ADV of 23,000, which is up 3,000 this week. UVXY 20 3/4, down 2 1/3 points from last week. 64,000 contracts on the tape right now. The ADV 71,000. Going to hit that today. That ADV is also unchanged on the week. So UVXY has been persisting in its volume. And VXX at a 51 even right now, down nearly 4 points, 3.8 points on the week. 28,000 contracts on the tape right now. The ADV 31,000, down about 2,000. Mr. Rhoads, really quickly, anything catching your eye in the rest of the ETP universe before we head to the crystal ball?
Nothing particularly catching my eye. I just keep doing the thing that I do with owning UVIX over the weekend. That's it.
And as soon as you talked
buy it this afternoon, sell it Monday morning.
As soon as you talked it up and how great it was doing, it took a big hit. So you jinxed yourself.
Usually when I talk about it, we have a bad weekend.
You jinxed yourself on that one. So
I'm not doing anything in UVIX. I don't even want to talk about it anymore.
Mum's the word on the UVIX as we keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, as we're coming into the end of the show, the rally is back on. Both S&P and NASDAQ are up again. Dow up as well. Dow up 0.85%. S&P up exactly 1% now. So getting back all of its luster. NASDAQ up 1.3%. That means our old pal VIX breaking through the 17 handle, down about half a point from where we started the show, 16 3/4 right now. So they are coming for vol, which should make all of our short vol fans in the pro very happy. Right now at the end of the show, listeners, 1671 is our closing print here for the show for VIX. And doing a quick cursory glance, it was myself, it was the Rock Lobster, and it was Mr. Dr. VIX on the show last week. The Rock Lobster was the lowest at 1901. So he was at least in the teens, but no joy for him. Russell was a little bit north of a 20 handle, 20 1/4, and I was at a 23 double, no joy for me this week. So Mr. Rock Lobster, as our closest, do you want to go first or do you want to go last?
I'll go first because I'll set the bar, and because I can't help it now.
Set the bar, he says. Talking smack.
I'll set the lower bar.
Oh, the low bar.
Maybe, or I'll be interested to see what Russell does with this one. But I'm feeling that the spat on the bromance breakup is going to be bearish VIX because I think it will be for whatever reason, because this is how usually these things go. So I'm going to go 15.99 for next week.
Ooh, 15. You know, is someone talking his book? You looking for that juicy penny on your 16 put, sir?
I'm looking for that penny. I want to get at least a
juicy penny.
You get a dollar cash settlement, and they charge you $20 for it.
Exactly.
Yeah, exactly.
You owe them money on the commission when all is said and done, sir. Sir, you owe us money on these VIX puts. Mr. Rhoads, you're our next closest. What are you feeling, sir?
I knew exactly what Andrew was going to guess.
Oh,
I knew 15.99 was coming. I just knew it. Goodness gracious. See, now I'm not talking my book, but 1876.
an interesting year. I should also probably put Andrew in the right category. I put him next to me. There we go. That's not my pick. 1876.
But there's just too many little things around the world, and the steep VIX curve makes me think that the vol traders don't think we're completely out of the woods yet, and they're smarter than I am.
That makes
so
my pick seem interesting, because I was going to put this in before anyone spoke, but I didn't want to seem like I was front running anybody. I wanted to go in order, but I was thinking 1775 the whole time, so that actually slots perfectly
right there
between everyone. It wasn't a plan, listeners, but that's just how it worked out. So an interesting tight market this week. Everybody in the teens, which means we're closing at a 32 next week. So watch out for something wild. If you want to see something wild next week, listeners, stay tuned. If you're on the pro, you got a hot one coming at you on Tuesday. If you are not part of the pro, you might be motivated to dive in next week. This is the time. We have the much anticipated Battle Royale. 2 men enter, 1 man leaves. Vixologist versus Dr. Vix. There can be only one. Vol battle for the ages coming up on Tuesday exclusively on the pro. So if you want to hear that, they've been talking smack to each other offline ever since Russell threw some barbs at his VIX charts. Jim's been angling for a bit of a rematch. Here we go. It's happening on the pro. Get in there. TheOptionsInsider.com/pro before Tuesday. It's the only place you're going to hear it. And trust me, you want to be there. Mr. Rhoads, any fighting words you want to leave us with?
No, just I'm binge watching all the Rockies and Rudy to get mentally prepared to go after Jim.
Give me your best. I must break you. Give me that.
Yes,
I must break you.
You know what my prediction is for the podcast?
What?
Pain.
Yes, there we go. I want to see some montages of you training on the beach over the weekend. And maybe working out in the snow. That would be good.
So rolling a tire. I want to see Russell rolling a tire.
Yes, I want to see all of that. So listeners, if you're on the vol side, if you are intrigued, join us on the pro on Tuesday. Man. Should be a good time. Mr. Rock Lobster, sir, I know you're going to want to be there if you can. In the meantime, what's going on in the land of the pit?
I got my weekly profit cycles. I'm starting right now. VIX and SPY. Come check us out. Check out Voz and her trading zone, which are I've never seen a product that do what it's doing, but it's pretty amazing. Check all that out. Optionpit.com, 888-TRADE-01, and I am off to weekly profit cycles myself right now. Have a good weekend.
You enjoy your profiting as we keep on rolling, listeners. If you're on the on-demand side, unfortunately, that will conclude your broadcast week with us. Yet another reason to hang out on the pro, because you'll be joining us in the after party for a little bit of options oddities. If you're hanging out in the pro, just hang out. We'll be back in a little bit with all things options oddities. Then we're back again on Monday for the option block, and then on Tuesday for a very special pro battle royale. 2 men enter, 1 man leave. All that fun, listeners. Check it out. It's going to be a good time. And then we'll see whatever survivor emerges will join us on Vol Views next Friday. See you then, and stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.